Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
All right, let's dive into one of the most common and, frankly, most expensive mistakes that people make with their taxes, especially if you're self-employed. It all boils down to a huge misunderstanding about tax extensions that could be quietly draining your bank account.
Does this sound familiar? Maybe you've thought it yourself or heard someone else say it. This one little question is exactly why we're talking today. And the answer, which costs people a ton of money every single year, is a big, fat no. Let's break down exactly why that is.
You know, to really get a feel for the stakes here, let's walk through a real-world story. It's a classic case that, ironically, starts with things going really, really well. So picture this. There's a self-employed business owner, and 2022 was just a fantastic year for them. Income was way higher than usual, so they do what they think is the responsible thing. They file an extension to push their tax paperwork deadline to October. And with all that extra time they thought they had, they make a smart business move and invest their cash in a new work vehicle. Everything's looking great, right up until they have a little chat with their accountant, and that's when the panic sets in.
And that conversation, that moment of panic, gets us right to the heart of the problem. It was all caused by a really common but really costly misunderstanding of what a tax extension actually is. Okay, this right here is the absolute most important thing to understand. An extension to file just gives you more time to get your paperwork together and submit it, moving your deadline from April to October. Simple enough. But an extension to pay? Well, that's not a thing. It literally does not exist. Your tax payment is still due on the original deadline, which is usually April 15th, regardless of when you actually file your forms. So to make sure you never fall into this trap, it really helps to think about your tax responsibilities the way the IRS does. It's not just one tax day event. It's actually 3 separate duties you have all year long. These are the 3 big ones. First, you have a duty to file your return on time. Second, you have a duty to pay the taxes you owe by the deadline. And third, and this is the one that really trips up business owners, you have a duty to prepay. So what is this duty to prepay? Well, it's pretty much what it sounds like. The IRS wants their cut of your income as you earn it, not in one giant check a year later. Now, if you're a regular employee, this is easy. It's just withholding from your paycheck. But if you're self-employed, the responsibility is all on you to figure it out and send in quarterly estimated payments throughout the year. Okay, so what happens if you mess one of these duties up? Why does it matter so much? Well, it all comes down to one little word that nobody likes to hear: penalties. Yeah, the IRS doesn't just send you a friendly little note. If you get this stuff wrong, it's going to cost you. And there are different penalties for different mistakes. And this little table shows you exactly why filing that extension is still a really, really good idea. Check this out. The late payment penalty is 0.5% of what you owe for every month you're late. But look at the late filing penalty. If you don't file your return or an extension, it's a massive 5% per month. That is 10 times worse. Both penalties can go up to 25% of your tax bill, but that late filing penalty will get you there a whole lot faster. Oh, and it gets better. On top of all those penalties, the IRS also charges you interest on everything you owe, so the total amount just keeps ticking up and up. And remember that third duty, the duty to prepay? Yep, there's a penalty for that too. If you don't pay in enough tax through your quarterly payments during the year, they can hit you with a whole separate underpayment penalty. It's just another way the system makes sure you pay as you go. So, let's circle all the way back to our business owner. Now that we know the rules of the game, we can see exactly where they stand and what they need to do next. The good news is, by filing that extension, our business owner actually made a super smart move, even if they didn't know why. They completely avoided that brutal 5% a month late filing penalty. That right there is a huge win. But, and this is the big but, because the extension didn't move their payment deadline, that late payment penalty clock started ticking way back in April. So for every month that's passed, they've been racking up that 0.5% penalty on their tax bill. The solution here is, well, it's pretty simple and a little painful. For our business owner and for anyone else in this boat, the only thing to do is pay what you owe as fast as you possibly can. Every single day you wait, those penalties and that interest just keep on growing. So at the end of the day, getting the difference between filing and paying isn't just some boring tax rule. It's about protecting your wallet. Knowing those three duties, to file, to pay, and to prepay, is really your best defense against these nasty, unexpected costs. So maybe it's worth asking yourself, is your tax plan really protecting you? Thanks for tuning in.